Robschild, no investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro technicals, and of course, crystal ball gazing. Today is Wednesday, December 4th, 2024. Today's episode, not a whole lot to report. The ADP numbers didn't come out like crazily low or negative, so it's not like, okay, we had no black swan event today, pretty uneventful. Some slightly interesting things going on in some charts today, but besides that, main thing is we're all waiting for Friday. Friday is the big employment report. If this ticks higher, or significantly higher, that can be like the alarm bell to set things going the other way. If not, I don't even know how high we'll go from here. We're really close. We almost hit that 6,100 level in the S&P 500. Before diving into the charts, none of the daily reminders change. If you want to hear me read through the daily reminders, watch Monday's show. That's 12:2 with the bear and the ball. These are all items that, I don't talk about them every day anymore. I only bring them up on Mondays. Even with just Mondays, it's starting to get really repetitive. But nonetheless, I think these are the most important things to have in the back of any serious investors or trader's mind. With no changes in the daily reminders, there's no changes in the crystal ball ratings. The S&P 500, I don't care how high the price goes from here, it's still, the value's not there to back it up. It relies only on other people to pay a higher price. It's telling me it's a really dangerous market, telling me that there's probably a bear market coming sooner than later. And with fiscal dominance or close to fiscal dominance in the United States, the Fed cuts won't set, inflation going higher and higher here. That's what tool is driving inflation higher right now? There is none. We're going the other direction. It's very clear when you look at everything. Jumping straight into the charts, the S&P 500 closed at a new all-time high. Going up 0.6%, pretty good move high. We had the high of the day at 60.8984, so not quite hitting that 6,100 mark. It's certainly not out of the cards for the S&P 500 to continue higher and higher. People can decide to, buy these stocks at these valuations at higher and higher prices. I'm not willing to participate in such a dangerous gamble myself. It's very interesting to watch. One person I even came across is actually saying that we're headed to a 7,000 mark before an ultimate crash. And, I don't really know. I have no idea, but I'm not going to be buying something that I perceive as at dangerously high values, seeing as how much it can realistically lose it in price back to down to either a normal valuation or even a below normal valuation, which is when is the safe time to actually be buying something like the S&P 500. I'll add to this again. Friday could be a big day. Friday could mark the top for a long time. If we end up in a depression similar to the 1929 top, we're at we're high or above those valuations that we had in 1929. And so it wouldn't be surprising to me if literally Friday was the highest the market sees for the next 30 years. And I'm not exaggerating. This is the reality of the way I see this situation. And with that said, there's nothing stopping from the market from Mr. Market continuing to go faster and faster the wrong way down the highway, drinking whatever he's drinking. Notably, the triple Qs also hit an all-time high today. A while back, I had been talking about there being a Head and Shoulders looking top on the triple Qs, and that is clearly out of the picture now at this point. From a charting perspective, it just looks very bullish. Looks like the Qs are going to keep going up in price. And the higher the price goes without the value also going up at the same rate, the easier it is for this to drop in price. TLT, still my favorite place to be. Again, all of these shows function as an extension of Monday's show. If you want to hear stuff more in depth about what I believe is going on, watch Monday's show. TLT, still my favorite place to be. I mentioned yesterday a large red candle engulfing the previous 2 days, signaling perhaps that, it's looking bearish, and we had an opening quite a bit lower, and the bulls just drove it way above this candle. This is a very formidable engulfing candle of now the past 3 days, and we're developing sort of a megaphone kind of pattern here. It'll be really, really interesting to see how this plays out. But it no longer looks bearish by any means, as it did yesterday to some degree. Next, the dollar index from 2 days ago had a pretty good green candle, and this is very obviously a pretty clear bull flag in the very short term. Looks like the dollar kind of wants to go higher now. Oil on the verge of collapse to an extremely low level, in my strong opinion. Again, watch Monday's show to get the details. More details. I've been noting we've been getting a little tighter here, and we popped yesterday up to the upside, and we hit this recent trend line pretty perfectly within this wedge. We didn't break out to the upside yet. If we do, the oil market's survival may be a little prolonged. I know a lot of markets are kind of waiting to hear how the new political regime is going to handle a lot of things, and people are talking a lot about tariffs and oil production in the U.S. and, one thing keeping the oil market on its toes is the U.S. potentially producing a lot more oil, as far as I know. And if that's the case, if the oil industry, if the global oil market is sensing that, they're going to want to be getting as many profits as they can while they still can, potentially being, the break in the oil market here to the downside. They certainly have the capacity to overproduce to the point where oil could get extremely cheap if the powers that be decided to have that happen. So we'll see how it all plays out. SMH, semiconductors. If you're watching the show, I have it's 5% of my portfolio shorting semiconductors with SOXS. We popped up to the upside today. I will not come out of my bearish position unless we get above this previous engulfing candle on October 15th. So we will need to close above 261 in order for me to exit my short position. Until then, I still believe that this is Mr. Market at the potential long-term top of an industry that I think has just way too much speculative value. And lots of chart patterns indicating to me that, pretty good chance of rolling over here. And I can't sit on the sidelines and not make money on it going down if that's what happens. Nissan stock. If you've been watching the show, you might know that Nissan is it's the only stock really that I'm interested in as an individual stock. I believe it is highly undervalued, and the lower the price goes, the safer of an investment it is for me, because of the fact that I believe that the balance sheet shows that if the company were to liquidate today, I'd be making a ton of money, which makes me very happy. And so all the way down to closing at 473 today in Nissan. Next, gold. After this large red candle, very clear bear flag that we're still in. The longer that this goes, you can eventually get to the point where you start having a higher probability of it actually breaking to the upside instead of the downside. I don't know if we're there yet. We're certainly past the psychological mark that some traders use of 7. It's called a time count: 1, 2, 3, 4, 5, 6, 7. So we're past that now. Maybe this is the last one that'll break down to the downside. Not sure. Interesting to watch. I'm not participating anyway in gold. I think gold has gotten ahead of itself in price. You know, its current price, in my opinion, is driven by fear of inflation continuing higher because of the last bout of inflation that we had, and I don't believe we're headed into another big wave of depression. A big wave of inflation, rather. And so I favor the view that gold can cool off in price here, but I really don't know. What I do know is the price of gold relative to lots of other things. The price of wood, wood to gold ratio is a pretty interesting one, or silver to gold ratio, or copper to gold ratio. There's a bunch of them. And in any kind of chart you draw with moving averages and that kind of thing, it's pretty darn clear that gold is more expensive than it should be. And, with something that's clearly above where it traditionally is for its valuation, it tells me that it's a dangerous thing to own. You find safety exists in cheap prices, not expensive prices. It feels different. It feels the opposite. When something gets expensive, it feels safe to have it. The reality is the opposite. When something's very cheap, that's when it's safe to have it. When something's very expensive, that's when it's dangerous to be having it, buying it, holding it. And speaking of danger, we're going to dive into our last chart of Bitcoin. Wow, look at this. As I speak right now, hitting a 99,142. My understanding is that this is on UTC time, closing in 20 minutes. My understanding is that as long as we close around this level, it's unbelievable how many people out there that I've listened to that have a target of 108,000. It includes people that use like a bunch of different charting methods. They're all saying that like it's 108,000. That's the next level that we'll hit, and have a battle there at the very least, if not have a top for a while around 108,000. And if we don't head up there, if we start, we're going sideways here. If we start looking bearish, it seems like some good chartists that I pay attention to are looking at the bottom, short-term bottom to be around 75,000. And that's all from me and my crystal ball. I hope you enjoyed, and thank you for watching, and see you next time. Robschild.